Friends, welcome to Sound Money. Recently, many friends have been asking me the same question. Why does the current silver market look so fragmented? You look at the price quotes on television, it is clearly still hovering around just over 100. You'd think it is pretty stable, right? But if you've actually had the idea these past couple of days to go out and buy some physical silver coins or silver bars, you'll immediately notice something's off. The actual transaction price and the number on the screen, it is like there is a mountain between them. This is just like when we go to a vegetable market, the broadcast clearly says vegetable prices are stable, but when you actually get to the stall, the number on the price tag makes you not dare to buy. What kind of shady business is hidden in between all this? Who is it that is secretly swapping the prices in the middle? The news clearly says that with the US dollar being strong recently these past few days, I was having tea and chatting with a few friends who've been in the financial world for 30 or 40 years, and we all coincidentally talked about a very abnormal, or you could even say bizarre phenomenon. As everyone knows, when we buy stocks, we're buying a company's future. For example, Nvidia, we're optimistic it will make money. But when buying silver, what many people are trading on the market now is actually just a piece of paper, or in other words, a string of electronic signals. Recently, a piece of news has been spreading like wildfire in the market, and some analysis reports even deduce that the future price of silver has a chance of reaching over $100. Hearing this, don't get excited just yet, and don't think I am giving you a hot tip or telling a fairy tale. This number doesn't mean the price of silver will become like this tomorrow or the day after. It represents a change in the underlying logic, a distrust of the existing pricing system. So why do people say that? The story starts in New York, in the US, over there. There is the world's largest precious metals exchange, called COMEX. The gold and silver prices you see on television every day are basically set there. But this exchange recently had an unprecedented, massive inventory move out. So what is this like? Let me give you an analogy. You'll get it as soon as you hear it. It is like a really big bakery chain that issued a lot of bread coupons, telling everyone that with a coupon, you can pick up a freshly baked loaf of bread anytime. In the past, everyone felt that holding on to the coupons was very convenient, a thin piece of paper in your wallet in the financial circle. There is a very professional term for this called a run or a squeeze. But in the eyes of us ordinary folks, this is the most direct crisis of confidence. According to the latest data, in just one short week, over 30 million ounces of silver were physically withdrawn by people from the warehouses of the COMEX exchange, friends. You might not have much of a concept of the number 30 million ounces. Let me put it this way. This is not a small amount. This is equivalent to the entire year's output of a world-class, super large silver mine painstakingly dug. And as a result, in just a few short days, it was all cleared out by these mysterious big players. This is definitely not something retail investors, moving things bit by bit like ants, could achieve. For retail investors, buying a few bars or a few dozen bars is already considered a lot. A withdrawal of this scale behind it must be the real big players, the smartest money. They are desperately shipping real silver back home and locking it in their own safes. Originally, the inventory in the exchange was the source of everyone's confidence in these paper contracts. The reason everyone dares to buy futures contracts is that they believe that if by any chance I want the physical goods, the exchange can definitely deliver. But now this level has dropped to a 15-year low. If we compare the exchange to a large reservoir that supplies water to the entire city, now the water level in the reservoir is almost at the bottom, with the riverbed exposed. But the people holding water tickets standing outside the dam to exchange for water are lined up for several kilometers. What cruel truth does this reveal? It shows that these top investors no longer believe in the fluctuating price number on the computer screen. That number is the price of paper silver, an electronic contract that can be issued indefinitely, while what everyone is scrambling for now is physical silver, a real resource on Earth that diminishes with every bit dug up. The price between these two is severely decoupling. Paper wealth can evaporate overnight. But the real gold and silver held in your hands is the arc that gets you through the cycles. Okay, let's continue. In the financial markets, there is an even stranger phenomenon. And this is a signal I want to specially remind everyone to pay attention to today. This signal is a little bit technical, but I promise to explain it in the simplest terms. So you can understand, usually when we invest in futures, if the contract I am holding is about to expire, let's say it is a January contract, but I still want to keep investing in silver and don't want to take the silver bars home right now, what would I do? I would sell the January contract and then buy a March or May one. This is called rolling over or rolling forward. This is a very standard operation. Just like when our fixed deposit at the bank matures and we renew it, it is very natural. And usually there are no extra costs sometimes. You can even make a small profit from the price difference. But a very bizarre phenomenon appeared at the beginning of this year. We discovered that a large number of investors were unwilling to roll over. And they weren't willing to wait until March. They would rather pay extra costs to take early delivery on their future contracts now. This is like you originally booked a plane ticket for a trip to Japan 3 months from now. The ticket is already bought. But now you suddenly get an impulse, or rather a sense of fear, and you'd rather spend a huge amount on change fees and service charges just to change your flight to tomorrow morning. Why, you are not in a hurry. So why would you spend this unnecessary money? Usually, there is only one reason you are afraid that in 3 months, this airline might go bankrupt, or the plane will run out of fuel and won't be able to fly. You just want to hurry up and get on the plane while it can still fly. Just fly out first and worry about the rest later. In the silver market, this is called a spot premium. This means the big players are extremely eager to secure their assets. They would rather spend more money now to ensure the silver is in their own hands. This is an extreme sense of distrust and also a silent protest against the existing paper gold, paper silver system. Here I also want to share with you all a little known, but very crucial indicator called the silver lease rate. This thing sounds very professional, but actually the principle is very simple. We put money in the bank gives us interest, right? Because the bank can use our money to give out loans and make money. But silver is a metal, a bunch of heavy bricks, pudding friends. Think about it. This is too unreasonable, right? Right now, how much is the interest on a bank's fixed deposit? A USD fixed deposit is a bit better, at just over 4%. Why would someone be willing to pay interest as high as 8% to borrow a bunch of silver that doesn't generate interest? Wouldn't it be better for them to just borrow money? Why honestly insist on borrowing silver? The only explanation is the real physical silver in the market is already so scarce that even industry insiders can't borrow it. Those short-selling institutions that originally promised to deliver silver, they might have sold too many paper promises. Now the contracts are due, buyers are at the door asking for the goods, and they find that the goods they have on hand are nowhere near enough to cover it. In order to fulfill their promises and avoid being sued for breach of contract, they have to grit their teeth and pay high prices to borrow and to buy. This is just like when there is an egg shortage in the market. Egg suppliers, in order to deliver to restaurants, have to source them from everywhere at high prices. Even if it means losing money, they have to come up with the eggs. This surge in the lease rate is itself telling the whole world an open secret: physical silver, it is really out of stock. And the shortage is very severe. Speaking of which, many friends might ask, isn't silver just for making jewelry and silver coins? How can it be in such short supply? Aren't there still a lot of mines on Earth? This is the biggest misconception the public has about silver, and also the biggest difference between silver and gold. When gold is mined, over 90% of it is made into gold bars, gold coins, or jewelry, and then it is carefully locked away in a safe by people or worn on their bodies. It doesn't disappear. It is always there. The gold of the Egyptian pharaohs from thousands of years ago might now be melted down into the gold ring on your hand. Gold is eternal, but silver is different. Silver has a very special identity. It is an industrial metal. Silver is the most conductive metal on Earth. bar none. The phone you are watching this video on right now, the computer at home, the electric cars on the road, switches, missiles, especially the hottest thing right now, the solar panels on rooftops, all of them can't do without silver. And the deadliest part is when this silver is used in electronic products. The amount used in each unit is very small. Sometimes it is just a tiny bit of coating. What does this lead to? It leads to recycling being very difficult and the cost being very high. A lot of the time, once this silver is used up, it is gone, becoming industrial waste, buried in landfills, and disappearing from the human cycle. Therefore, silver is a consumable. We are eating up large amounts of silver every day. Right now, the whole world is doing green energy, doing carbon neutrality. A single solar panel needs to use silver paste. This demand is growing explosively. But what about the output from mines? Mining is very hard work, and a new mine from exploration to production often takes more than 10 years. In recent years, because environmental regulations have gotten stricter, plus rising mining costs, silver production can't keep up with the growth in demand at all. According to data from the World Silver Institute, we've been in a state of deficit for several years in a row. In other words, the silver we use every year is more than what we dig out from underground. In the past few years, this gap was filled by previously accumulated above ground stockpiles. But now the stockpiles are almost unable to fill the gap. The bottoming out of COMEX inventories is the best proof. There is another factor that is even more noteworthy. China is the world's main silver refining and production location, and also a major consumer of silver. Recently, China's controls on silver exports have become increasingly strict, and they've implemented a quota system. This is like the world's largest granary closing its main gate, leaving only a small crack. How can the outside world not panic? This has further exacerbated the shortage of physical silver on the international market. So, this isn't artificial hype. This is a hard and fast case of supply failing to meet demand. This is a long-term structural problem, not something that can be solved in the short term. Speaking of which, this brings us back to that annoying phenomenon we talked about at the beginning. Why is it that when I go to a silver shop, the price the owner quotes is so expensive? Is he ripping me off? Actually, this decoupling phenomenon has been happening for a while now, and it might become the new normal, my friends. If you go to buy those government-issued investment-grade silver coins now, like the American Eagle or the Canadian Maple Leaf, you'll find that the money you have to pay is far higher than the international spot price you see on television. In the past, like a few years ago, when we bought silver coins, we'd probably just have to pay a premium of an extra $2 or $3 on top of the international spot price. This was very reasonable. After all, minting costs money, shipping costs money, and the shop owner needs to make a profit, right? And now this premium can be as high as $10+ US. Sometimes it is even as high as 30%, 40% or more. In other words, if the spot price of silver is $25, you might have to spend $35 or even more to buy one silver coin. A lot of people who don't get it will say, geez, the silver shop owner is so greedy, making way too much profit. Or, this price is ridiculous. I am not buying it. I'll wait for the premium to come down before I buy. Actually, that is not the case. The silver shop owner is also helpless because his cost of goods has also gone up. This is the market voting with its feet. That so-called international standard price is the price of the futures market, a paper wealth price. That price is built on the assumption that nobody takes delivery. But the price you pay out of your own pocket at the silver shop is the true value of silver, the real price that comes out of the game between supply and demand. This huge price difference in between, I interpret it as the cost of trust. When the premium rate soars, This represents a rising distrust in the futures market. People would rather spend 30% more money for peace of mind, for something solid and heavy to hold the $109 projection we just mentioned. It is not actually saying the futures price will rise to 109 tomorrow, but rather, if you factor back in these real premiums, inflation factors, and silver's historical real purchasing power, silver should be worth this price. Everyone, think back. Many friends might have an impression. Back in 1980, because of the Hunt brothers market cornering incident, silver once rose to $50. That was $50 from over 40 years ago. How much could $50 buy back then? Money now is as flimsy as toilet paper after over 40 years of inflation. Yet silver's futures quote is still only in the 20s. Is this reasonable? This is obviously being suppressed, and now this lid of suppression is about to be blown off by steam, and the market is reclaiming the justice it deserves. Here I want to especially remind all you friends, especially those of us who want to do retirement planning and asset preservation. This point is very important. Please make sure you listen up. Many people feel that buying physical silver is too much trouble. After buying it, you have to find a place to put it. The safe at home is too small. You are afraid of dampness if you put it under the bed, and you are afraid a thief might break in and steal it. So they listen to their financial advisor's advice and buy bank-issued silver passbooks or silver ETFs in the stock market. They think, this is so convenient. You can invest with the tap of a finger, just like buying stocks, and you don't even have to worry about storage. In normal times, in times of peace and prosperity, this is indeed very convenient. And the liquidity is also very good. But in an extremely special period like now, behind this convenience hides a huge risk. Why? Because these ETFs, or paper silver, they are financial derivatives. If you carefully read their prospectuses, that is a thick English legal document. And inside there is usually a disclaimer clause or a force majeure clause. This clause roughly means that under special circumstances, if there is insufficient market liquidity, or if they cannot obtain enough physical silver, the fund company can choose cash settlement. What does that mean? Let me translate it for you. It means that if one day silver really skyrockets or the exchange really can't produce the silver, and the run we mentioned earlier happens, at that point, when you want to redeem your silver ETF, the fund company can just spread their hands and say, sorry, we're out of stock. I can't buy any silver either. How about this? We'll convert it to cash and refund you according to today's closing price. You might say, that is not bad. At least I got my money and didn't lose anything wrong. Dead wrong. When that day comes, the price in the futures market might be a very suppressed illusion, or the price before trading was halted. But the real price of silver on the outside might have already shot to the moon. What you get is a pile of cash that is rapidly devaluing, and you can no longer afford real silver. You originally counted on silver to help you hedge against inflation and protect your assets, but as a result, at the most critical moment, you get kicked out of the game. It is like the rice ticket analogy we just mentioned. A rice seller gave you a rice ticket, but then a great famine broke out. The price of rice skyrocketed, and no one could get their hands on any rice. He tells you, I am out of rice. I'll refund you the $100 you paid for the ticket. At that point, that $100 can't even buy a bowl of congee. What you want is rice, but what he is giving you is worthless paper. This is why I always emphasize one thing. If you can't touch it, you don't really own it. Of course, some ETFs like PSLV have a better reputation. They're advertised as being fully backed by physical assets. However, to apply to redeem PSLV for physical assets, the threshold is very high, usually starting at tens of thousands of US dollars, and the process is cumbersome. You have to fill out a bunch of forms and wait for several weeks. For us regular investors, this is practically something you can see but can't get. Having said so much about the market's ups and downs, some friends might feel a bit panicked after hearing this. Actually, there is no need to panic. We understand the truth in order to make the best preparations. We ordinary folks, are not the big shots of Wall Street. We don't have the power to command the winds and rains, nor do we want to participate in that kind of bloody futures game. What we want is just peace of mind, a safeguard for our family's wealth, so that our nest egg can be safe and sound in the face of the behemoth of inflation. Regarding the current situation, I have 3 heartfelt suggestions to share with everyone. First, if you are going to buy, try your best to buy something you can touch. Don't be afraid of the hassle. Whether it is going to a silver shop to buy silver coins, silver bars, or even silver jewelry at home, as long as it is physical, it is safer than a promise on paper. Don't complain that the premium is expensive. That premium is the insurance fee you pay for safety, especially when the financial system is unstable. Those on-paper assets could very likely cause your wealth to shrink due to a change in the rules of the game. Only what is locked in your home safe is truly yours. No one can take it and no one can deny it. Second, be mentally prepared to hold it for the long term. This destocking and price reversion we're talking about is a major trend. It is the giant wheel of history turning. This is definitely not a buy today, get rich tomorrow kind of thing. In between, there will definitely be fluctuations, there will be pullbacks. And the short sellers on Wall Street won't surrender easily. They will counterattack, and the price will go up and down. Your investment mindset needs to be stable. We're doing this to preserve value, to fight inflation, not to gamble for a quick buck. If you come to buy physical silver with the mentality of day trading stocks, you are going to have a painful time. But if you treat it as a family heirloom, as a treasure at the bottom of your chest, your mindset will be very relaxed. Look at those people who leave gold and silver to their grandchildren. They never stare at the prices every day because they know the longer you keep this stuff, the more valuable it becomes. Third, stay rational. See the real value. Don't be scared by short-term ups and downs. If you calculate based on the inflation of the past 40 years, silver right now is actually still at a relatively low point, or even dirt cheap. When you see the news say silver has plummeted, but you go to a silver shop and find the owner is reluctant to sell and you can't buy any. Which one are you going to believe? Of course, believe the reality that you can't buy it. The market is always right, but quotes can sometimes be deceptive. The way to wealth is first and foremost to know what is real and what is fake. In this era where banknotes are printed thinner and thinner, and the numbers game gets more and more complex, returning to the most simple and honest value is perhaps the smartest choice. $109 might be a future predicted figure. We don't necessarily have to be fixated on this price point, but it represents a yearning for real wealth, a return to value when the tide goes out. We'll know who's been swimming naked. When paper contracts become worthless, we'll know who is holding real gold and silver. All right, that is all for today. If you feel that today's in-depth analysis has helped you see through the fog of the market and has put your mind at ease, please don't forget to give me a like, as this is the biggest encouragement for me. Please also subscribe to our channel and share this video with your friends who are also worrying about their retirement funds. We will continue to be here to be the lighthouse on your path to wealth, helping you watch over every brewing storm. No matter how the world changes, I hope everyone can eat well, sleep well, and be able to laugh. I am your old friend. We'll see you in the next video, wishing everyone peace and safety.